Welcome to Stu-C TV friends. Today for your CAB exam, we will be discussing the topic types of borrowers. This is from paper 1 of ABM. So let's start. Before we start, I'll just ask you to read through these questions because when you read through questions and then start preparing, you will get an idea what to study, which topics to avoid, which topics to really study in detail. So this is important. You always start your study session with questions. So let's go. Minor's role in a partnership firm. What does the law state? Which specific law governs the operations and borrowing activities of LLP? Section 11 of Indian Contract Act, which is a necessary condition for a person to be considered competent to contract. So you see these topics, it's discussing about minor's role, it is discussing about LLP and the act related to it, it is discussing about the conditions for a person to enter into a contract. So these are the kind of questions expected in this topic. Now let's jump into a study session, and then once we finish our session we'll come back to these questions and attempt them. What is a borrower? Again, simple: who has borrowed money from a lender with an agreement to repay within a specific time period. Now, what does a bank do? Bank accepts deposits and then lends that money to earn profit through interest. Now, what is the relationship between bank and creditor? Bank and borrower. It's a creditor-debtor relationship. So, bank is the creditor. It lends principal, provides funds. Then, borrower as a debtor repays principal and interest, and their repayment is governed by loan agreement. So, this is the basic process happening here. Then, what are the contractual obligations? There is a borrowing agreement like a housing loan or a car loan agreement. So that agreement, when the borrower signs, it will create a contractual obligation to repay with interest. Then legal competency, this is very important from exam point of view. Parties must be competent as per Indian Contract Act 1872, and if the contractual obligations once signed are not met, then bank will take legal recourse. Then what decides the capacity to enter into contract? Again, as per section 11 of 1872, there are mainly three criteria. First is age of majority. He should be either 18, he or she should be 18, or 21 if there is a guardian appointed by court. Then naturally he should be of sound mind, not under influence of alcohol or drugs. Then he should not be disqualified by law, like undischarged insolvents. Undischarged insolvents are those who are facing bankruptcy actions or insolvency. Now, who are incompetent persons to enter into a contract? First, we discussed earlier persons of unsound mind, lunatics, idiots, highly drunk persons. Then, those who are disqualified by law. So, that means law does not perform and allow them to enter into any contract. These are undischarged insolvents who are facing insolvency and bankruptcy laws, and then companies in liquidation where their assets are being sold off, so such companies are not allowed for further loans. Then unregistered corporation or clubs. Many a times you might have seen some organizations with great names, but actually, if you look into the detail, they will not be registered with uh, any under any law. So such organizations or clubs, corporations won't be considered competent to enter into a contract. Now, there are some special rules for minors. What are those? First of all, minors are persons under 18 years or under 21 if a guardian is appointed by court of law. Second, what is their contract status? Contracts made by minors are simply void. So, there is no question about entering into a contract because minors cannot by law enter into a contract. So, but banks always allow for account opening minors aged above 10 years. So that is for account opening. Then guardians are allowed for borrowing on behalf of minors if that is a necessity like education, medical treatment, but again, this has to be proved before a court of law. So these are some important criteria for minors. Similarly, minors also, for example, they cannot become partners in a company, but they can get benefits from the partnerships if again it is for necessities like their education, medical treatment, etc. Okay. Then there are types of borrowers by occupation, mainly nine categories: agriculture, infrastructure, trade, manufacturing. So this classification you should be able to identify. For example, trade classification is for those activities which don't add any value. You are getting goods from one state, they are selling it in another state. That is kind of trading. It can be clothes, fruits, vegetables, etc. In manufacturing, you will always add value. You'll start with the raw material, then add value, it convert it into a finished product. So that is manufacturing. Then MSME, service providers, professionals like doctors, architects, accountants, retail and digital loans like personal loans, home loans. So these are different categories. Also, you have NBFCs. They borrow money from the banks and then further lend it to customers for on lending or other organizations. Okay, so these are nine major categories. Then there is always a question on wholesale versus retail lending. Wholesale lending includes government departments, PSUs, public and private corporations. Retail lending includes partnerships, HUF, proprietors, individuals, joint borrowers, trust, NGOs, and associations. So the last one is important. Remember that the trust, NGOs, and associations falls under retail lending. Then competent borrowers. So borrowers are individual entities, business entities, and institutional entities. Individuals like proprietors, HUFs, and major individuals. Business entities means partnerships and LLPs, private or public limited companies, agents. Institutional entities are those like registered societies, trust, and statutory corporations. Then there is always a legal framework for different borrowers and important from exam point of view. Individuals are governed by Indian Contract Act 1872, partnership firms Indian Partnership Act 1932, LLP is also part LLP Act 2008, HUF by Hindu Succession Act 1956, Companies Act for companies, Trust Indian Trust Act 1882, and other acts related to trust are Public Trust Acts of different states and Religious and Charitable Endowments Act. So cooperative societies are governed by Societies Act 1912, Multi-State Cooperative Societies Act 2002, and Society Registration Act. Clubs and associations are governed under laws which they are registered. The evolution of customer segmentation is like this. Pre-1950s, there was no concept of selling itself in banks. In 1960s, slowly, customer convenience, this word gained momentum, and SBI was the first bank in 1972 to actually divide customers into four categories. They were commercial, small businesses, agriculture, and personal banking. So this category was started by SBI. Digital era, further segmentation came with digital banking, and now we have different verticals in banks for wholesale, retail, MSME, and capital markets. So, key takeaways for CAB that legal competency is crucial for entering into a contract. There are different types of borrowers from individuals to corporations, and each will be governed by their own specific laws. So, this is a topic related to borrowers. And now let's come back to our questions. Regarding minor's role in partnership firm, what does the law state? Minor can become partner, absolutely no, wrong. A minor can be admitted only to the benefits of partnership. This sounds correct because he cannot be a partner, but if the benefits of a partnership is attributed to him for genuine needs, then that is possible. And minor cannot have any involvement with a partnership until they reach majority. They can have involvement in the form of getting benefits. Okay, if it is proved in court that it is necessary. So that is C is wrong. And minor can be a full partner. This is also wrong. So answer is option B. This is the most suitable answer. Which specific law governs operations and borrowing activities of a LLP? LLP is governed by Limited Liability Partnership Act 2008. Okay, Indian Contract Act is for individuals, and Indian Partnership Act 1932 is for partnerships. Section 11 of Indian Contract Act, which is a necessary condition to be considered competent to contract. So out of this, ABCD, major age of majority, citizen of India, registered business, valid proof of income. Just think, as per the Contract Act 1872. So the main criteria is age of majority. Others are not mentioned as the main criteria under this act. So out of all these options, A is the best answer. So I hope you have got some idea of this topic from ABM. This is from module C under credit management. Thank you.